Let's bring on board Rahul Bajoria, regional economist at Barclays, to talk about what he's feeling about the world right now. Rahul, hi, good morning. I'm going to first start off with a reaction from you on PBOC's decision to depreciate the yuan. And it seems like it's bringing about a fair amount of instability when it comes to the China region.
Well, the decision to, engineer a 2% depreciation in the currency was a bit of a surprise, but the market had been expecting a band widening from the central bank for quite some time. So it seems like there's a bit of substitution going on where the central bank prefers, direct currency depreciation rather than a wider band, which might have triggered uncertainty over capital outflows. Our sense is that, this is a bit of a reaction to the weak export numbers over the weekend. Activity numbers also are generally expected to be a bit muted. So I think all in all, we can expect more easing on the policy side from the central bank. We do expect more rate cuts to materialize as well.
Irrespective of what the Chinese, the Chinese government here is trying to do you think China is in a spot of bother? Local growth is not there, global growth concerns are there. China may be trying to cut interest rates down and they might be trying to kickstart the export engine, but they seriously have a problem.
Well, the problem is there more from a structural point of view. I mean, we have been indicating that Chinese growth is going to slow down on a structural basis on the back of their demographics, on the excess capacity that's there in their manufacturing sector, and with global backdrop remaining quite weak, PBOC is essentially following other central banks globally in providing more policy stimulus. We don't think that they have gone overboard in terms of trying to support the economy, but we with the recent crash in the equity markets, there is probably a little bit more room for policy support to be there in the background.
Yesterday we were having a lot of conversations with former commerce secretaries and a few other experts about the cost to the nation because of the disruption that is happening. Now it is also emerging that while there is a possibility that GST may still scrape through, there are a lot of noises which are saying that it may not probably happen. How big a setback would it be if GST misses the monsoon session, gets postponed to the winter session, and even then it will obviously be an uncertainty?
Well, obviously, it's going to be a disappointing outcome if the GST does not go through. But right from the beginning of the current Parliament session, it did seem that we are basically heading for a washout. I think from a reforms momentum perspective, it will be a setback. But reforms are essentially a two-part process. I mean, one part is legislative in nature, the other part is the implementation. And from an implementation point of view, we have been seeing better numbers coming out on planned capex of the government. We have also seen execution improving as the railways numbers showed earlier this week. So from that perspective, we are not that negative. Our sense is that a cyclical recovery still remains in place in India, and we'll probably see better numbers coming out in the next 3 to 4 quarters.
Rahul, everyone has an opinion on what Fed will do in September. What is your opinion? Will they move? Will they not move?
Well, our house call is that we are going to see a move of 25 basis point, with the improvement in the labor market. That still remains the backbone on which the Fed can go ahead and start normalizing its policy stance. Obviously, we'll have to see, what kind of wage growth numbers, pressures we are seeing, which is essentially non-existent right now. So if activity numbers are good as we get more data in August, I think that will probably be a cue for a 25 basis point increase.
Much appreciate you taking the time out and joining us for this perspective. Really good of you to join us this morning.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.